Alright guys, welcome back to the channel. We have some breaking news to go over here in this video. Russia has officially invaded Ukraine. Stocks are taking a hit. Oil is up about 4%. Natural gas up about 9% at the time of recording this video. So we have a lot to get into how exactly this is going to affect our markets as well as AMC. I also want to leave you guys with some ways to make some money off of this. War sucks and all, but that does not mean your portfolio needs to go into the toilet as well. Always, never a financial recommendation. But let's dive into this video. Hit that like button for me, subscribe to the channel, and comment down below. If you guys do that, you could help somebody else make money, a part of Ape Nation. So let's do those three things. Let's dive into this video. And as always, if you guys want access to all of my trades in real time, we are fully prepared for this scenario. Check that link out in the pinned comment down below. Get yourself some free stock with Webull, Moomoo, and Public down below in the description of this video. But we have it right here. Putin orders Russian troops into separatist-held areas of Ukraine. A decree signed by Russian President Vladimir Putin Monday, which recognized two pro-Moscow breakaway regions in eastern Ukraine, ordered Russian armed forces into the territories in what is called peacekeeping function. The U.S. expects Russian troops could move as soon as tonight or tomorrow into Donbass for their so-called peacekeeping mission, according to a senior U.S. Official familiar with the latest intelligence. The U.S. is still seeing preparations for a potential broadened operation, including loading amphibious ships and loading equipment for airborne units. Now, you're seeing a lot of other countries like the UK that are putting sanctions on Russia, but you are not seeing the United States yet. A matter of fact, we have sanctioned Ukraine in response to this, not yet Russia. So we'll see if we have a backbone, if we are actually going to follow through with what we have said, because by any metric of anything that anybody has said in the US government, this is classified as an invasion, and that is hurting the stock market today. A matter of fact, take a look at this. The Russian stock market was down over 17% today. That's a wild move to the downside. The German markets, France market, the Euro markets, Italian markets, every single stock market was down around 3.5 to 4%. And obviously you have Russia there down 17%. Now, this is a developing situation, so things could change. But by the time we wake up in the morning, there is going to be sanctions on Russia. If there is not, I mean, you just really got to question the government at this current moment. Not even political here, but that is a Russian invasion. So apparently we just got news as well that there is going to be a security meeting at the White House here shortly later on tonight, I believe around 9 p.m. So we might get those sanctions announced later on tonight. But this is really kind of starting to sound like a, World War III kind of situation. Hope to God that doesn't happen, but it's getting very bad out here. So that's also translating into the stock market being down about 2.5% on the NASDAQ right now, S&P down 1.71%, and the Dow futures down about 1.35%. You're definitely going to see a gap down. It looks like the S&P will open roughly $426 or $427 for the SPY, the ETF, the index that tracks the S&P 500. So it's going to open up somewhere down here, and then we're going to have to see if we retest that support around 420. But nevertheless, there is ways to profit off of this. Now, the most important thing to know is when these sanctions come, that is when oil, natural gas is really going to start to skyrocket. So you're seeing oil right now up about 3.14%. Brent crude, I don't know why it's not showing this, but it was up about 5%, and natural gas up about 8.33%. It's very volatile. They're moving around a lot. Once Russia is actually sanctioned and we know the full extent of those sanctions, that's when things will really start to hit the fan. So here's a headline that just came out 1 minute ago. U.S. representative on Putin ordering troops into Ukraine. This is not a peacekeeping operation. So like I said, developing situation, but exactly what is this going to do for AMC? Well, this is going to cause AMC to make a gap down in the morning. It's going to cause all of our favorite stocks to gap down in the morning. What is that ultimately? That is a buying opportunity. Best believe I'll be buying the dip across the board tomorrow. But keep in mind, this is not the holy grail. This is not. This is a secondary catalyst compared to the Fed. The Fed has all say so in how the markets are going to react. Think about it that way. This is going to be a near-term catalyst, mostly for oil and natural gas, because Russia does support about 40% of the natural gas and oil for Europe. So I think that's where the biggest trade is actually going to be. I think whatever trade you do, you have to think about this as a very short-lived catalyst. It would not surprise me if the markets go down Monday, Tuesday, rebound a little bit on Wednesday, rebound harder on Thursday and Friday. So with that in mind, AMC could fall down to levels in the, let's go ahead and pull this up. AMC could fall back down to about that $16 or even $15 price point. I'm not saying this to, spread FUD or to make you guys fearful. I'm saying this so you are prepared for what you are going to wake up to. And that's the utmost important thing, is to make sure people are prepared. And I just don't want anybody getting the wrong expectations here and freak out and panic because they wake up and their portfolio is down another 5 or possibly 10%. So the lowest point I think we could go is $15 per share. What looks more likely is that 16 to 16.50 mark. But we also know at the same time, you need to see the markets going down to see the MOAS. So this is all part of the plan, and I want to be very clear about this. Each and every single FUD catalyst, fear catalyst we get in the markets gets us closer to the MOAS, because as I've went over many times, the hedge funds are not hedging out their portfolios. They're hedging out their portfolios using the retail stocks that are already down 70 or 80%. Eventually, you're going to see that discorrelation start to correlate more, meaning Apple, Microsoft, the S&P 500 will start to come down as other stocks really start to chill out. This is like the bonds and the stock market. If you pull up the stock market chart, compare that to the bond chart, bonds are way down here, stocks are only up here. So eventually that divergence will close and you will see the hedge funds take a big hit, and that is what is going to happen. Apple, Microsoft, S&P, they're going to start coming down in a dramatic way, whereas your other stocks like AMC will start to react less fearful as the broad markets. That would be that divergence closing up, and I think that is possibly going to start happening tomorrow, throughout trading tomorrow, but it is possible to remain irrational and discorrelated for an extended period of time. Eventually it will come down and you will see the markets come roaring down. Now we're gonna have to wait obviously for the sanctions and what that does do. Markets going back up just a little bit, but guys, this is very early and this is gonna be a pretty red situation tomorrow. Now as far as how you guys can actually profit from this, I really like right now the USO. I have USO $72 calls, so those are probably gonna go close to in the money, if not in the money tomorrow. If sanctions are put on Russia, then I would imagine the USO goes to maybe $80 per share. Now, we could go even higher than that on the USO. We could make our way to $100 per share. Back in 2008, oil prices went up about 50%. The price of oil went from $100 to $400, and the USO went up about $200. So keep that in mind. There is definitely a big opportunity there. You can also do the butterflies, which I've went over. Check that out in the video. It says Russia invasion hedges. I believe I made that video yesterday. As well as that, I do like, speaking of that divergence here, I do like playing Apple because it is so high up. Premiums are cheap because nobody expects it could drop, and I actually like the debit spreads right here. If Apple just went back to its prices it was at in October, sitting at about $140, then those would pay out big time because the premiums are so cheap. What I've been doing, I buy a 150 put for Apple March 18th or April, whatever date it is, and then I sell a 145. So you pay about $45 for that trade. Your max gain is $500 if Apple closed under 145. And I do think Apple is going to make its way back down to this 140 mark here very, very shortly. So that is really how you can hedge out your portfolios. Not a recommendation. Anything could change. We could open and the markets could be green tomorrow. Would not surprise me one bit whatsoever. Things are up and then they're down, they're up and they're down. So be very careful with that. It's just a thought how you guys can hedge out your portfolios if you are worried about that. Thank you guys for watching, and I'll see you in the next one.